2, 1. Hey, everybody. Good afternoon. Welcome to 12-Minute Trading live here today on Monday, the 18th of September. I am joined with Dave Lukas on my side here. My name is Doc Severson, and we're with 12minutetrading.com. And we are in Fed week. So the Fed's going to be making their decision. Last time I checked, 97% chance of a rate pause this week, but we're not out of the woods when it comes to November and December into the end of the year. There's still about even odds into the end of the year. We're going to see some type of rate action. So obviously the market is extraordinarily rate sensitive with this. We have pushed this thing to the very edge of the abyss of its ability to operate in today's conditions. And one little push, one wafer thin mint, and this thing goes right over the edge. So
I thought we might see that last night with the crazy pricing in the treasury markets. I don't know if people saw that, but the 2-year jumped up like 40 basis points last night.
Yeah, I saw somebody bring that up. Like, what the hell's going on here?
Yeah, everybody was freaking out. That's on like FinTwit last night at like 10 o'clock at night about what was happening with the treasuries and stuff. And it turned out to be a glitch from whatever systems were feeding the data, or either that or it was a nice Fed intervention about 10 o'clock at night that brought that thing back down. But that was fun for a little while watching all these people freaking out over that. But yeah, Fed week, right? So what do we got? We've got a market that has everything pretty much priced in, right? So market thinks Fed's going to pause, and I think we're going to get that from the Fed. It's always the language from Powell, right? Which I think is going to be the same thing. Hey, we're going to continue to monitor the data and stuff. And, inflation's ticked back up, right? So we have to monitor that. But core has stayed in line. You're going to hear that. And then, they may set up for the need to do another hike in November. And I think we're going to have that issue because I think inflation is going to continue to go up with oil now at $95 a barrel, approaching 100. I think it's going to get to 100. So I think, the underpinning we've talked about of inflation is oil. It underpins everything. That is what drives the cost of just about 7,000 products, right? And transportation and everything that goes into homes and everything else. And so as oil continues to go up, inflation is going to continue to go up. So we're seeing kind of what happened in the 70s where they thought they had it beat and then all of a sudden it turned around and headed higher again. And so we're kind of seeing something similar to that. So that's just where we stand right now. We're in that time of year, right? Everybody says the next 2 weeks are supposed to be down weeks, right? That's the mantra, right? This is the seasonal worst 2 weeks of the year. The next 5 days, I think, are supposed to be the as a percentage, the worst 5 days of the year. And so we'll see if that plays out. But as of now, I think, the market's kind of doing what it needs to do. Like today, it's not doing anything. It's hanging sideways. It's just kind of waiting. I think tomorrow we're going to get more of the same. And I think we could actually bounce off the news on Wednesday with Powell. Then going into next week is when I think if we're going to see things really drop, I think that's when we're going to start to see it because we've got the debt ceiling and funding debate again. So, and right now there's no budget and the government might shut down. And we know when the government shuts down, even though it does every weekend, but when the government shuts down, it's the end of the world. It's Armageddon, all that fun stuff will come out and everything. So as we approach that, that's going to continue to, ratchet up, right? And that's going to affect the markets. And then we also have the UAW strike still happening and stuff too. So the longer that goes on, that's going to affect things too. So I think, this week we could see kind of that, plot along, bounce up, and then kind of give it all back into the end of the month there. I think that's kind of what we're looking at.
It's truly amazing, watching some of the mainstream media gaslight the public, like continually. Just like I was watching, I think it was the other day, last night, and it's like, oh yeah, these oil price hikes due to, Russia and Saudi Arabia, trimming output. And it's like, is that the real reason behind it? Maybe it's just a little bit of it, but it's like, it still speaks to the problem that we are now beholden to all these countries that hate our guts. So once again, we're right back into the same situation where we're, just like the 70s, we are,
Yep.
bent over the barrel of this world. So I am going to take a look at the charts here and look at the massive amount of energy that we have. This is a 100-point move on tap. And what I want you guys to do is I want you to look at this almost like a fuel gauge. So if we look at this as full and down here is empty, that's an E down there. Okay, so full and empty. When we're extremely full, notice how this is right before we get a big move into August. Big move down here into August. And then we got some sideways chop, which just like winds the spring up again. And notice we had another energy peak here in mid-August, and then we got the final dump over about 3 or 4 days into exhaustion. What do? We bounce back up again. Look at this. Once again, we had full energy, and then boom. So this doesn't predict which way it's going to go. It just tells you when to anticipate a big move. Guess where we are right now? There we go. So we've got about the last few of these have been good for at least 100 points. So we're sitting on the potential for at least a 100-point move up or down, or like Dave says, it could be up and then down, because don't forget, we've got all this weekly energy that can go. Or conversely, we could see it go down first and then back up. So that...
Yeah, the key to everything right now is, obviously, we talked about it this week. You've got the sideways triangle there, which is, it's so hard to pattern that because it can break either way out of that. And right now it's higher highs, lower lows, right? That's what you're watching for. We're just going sideways in a range right now. We haven't busted out anywhere. And this accumulation, this is what happens. And you got a daily chart that, remember, these things happen from the shorter time frames out. So you've got the daily chart that kicks it off, and then it turns into the weekly chart. So what you look for is those, again, breaking out above those previous highs or the previous lows. So right now, what do we got the last high at there, Doc? Right around
just
45.
Just about 4,500. Yeah, like maybe 45.10 or so.
Right. And then we got the low, around 4,300, right? Right around there.
Oh,
well, so
this one,
this
one is 43.40. So yeah, it's all over the map here. The thing that makes
the ultimate low is that one. Yeah, you just had to highlight on the 43.50.
I think what makes this really difficult to the average retail investor is that most of the time you will see markets, the initial break out of a pattern like this will be false.
Exactly.
So like what Dave was talking about, like if we see the initial break to the upside, I would duck and cover because this is what's coming. Conversely, if we see the initial move out of this pattern go to the downside, this is where you should be selling puts like crazy because we're more than likely going to rally into the fourth quarter. And maybe all of those will happen, but this is one thing. Let me show you guys just really quick. This is the one that sticks with me, and this goes back some time ago. But we're going to go back in the Wayback Machine here. And this is the one, this is my favorite example of this, where we saw in 2011, this is where we had the downgrade of the United States. And then, chop, 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 double bottom with an undercut, which is a great bullish signal. So we rallied like crazy into this, and look at this beautiful pennant pattern. Everybody in the planet was looking for this thing to break out to the upside, including myself. And it went to the downside instead. And then look what happened after that. So initial move was false. The eventual move was to the upside in this. So keep that in mind. This is probably the best example that I've seen of this, but I just see this constantly, this sort of, head fake type of almost, running back type of motion where the market's into the secondary, and it's easy to fake everybody out when you get that head of speed. So watch out for this in the near term. Looking at today, we're just all over the map. You can see the opening range setting up, and we're above the opening range. We did find resistance at the upper expected move here today, but today and tomorrow are just going to be throwaway days. So it's going to be more just range bound, just like drifty action. You're not going to see much of anything, and then all hell breaks loose on Wednesday. Again, I don't think it's going to be anything where we have
unless he surprises and raises rates, right? That's like your big surprise, right?
Which is not going
to be the only thing.
It's not going to happen. It's not going to happen. Because Powell has learned from his earlier mistakes back in 2018 not to surprise the market. So since that point, he's done a very good job of like feeding just enough information out to the market so that they can get a good read on what he's about to say. However, that doesn't mean that he can't go a little bit rogue during his press conference area, or a little, not necessarily rogue, but he can come across as being very hawkish during those times. And so he's not going to.
Yeah, here's what always has my always, like, I know I've noticed this over the years, and you may notice it too. And like, usually, like, there are times in the year where I get these stretches, and I was talking to my students about it over the weekend in the newsletter and everything for the service. And like, I'll get in these times where I go for like 4 to 6 weeks where the market doesn't go anywhere. And because I do a lot of, condors and stuff like that, my P&L explodes. Like, I get very, very profitable. Right. And part of that's because we're losing some of the volatility during that time and everything too. And so when I see, like, my P&L go up by 25% in the course of a short time like that, over the course of 4 to 6 weeks, while we're waiting for one of these moves, like, that's a telltale sign a big move is coming. Where it's right around the corner. So what I do during these times is I get out. I get out of those positions as much as possible. Like, I'll even get out a little bit, above my profit target and stuff, free up that cash, and then get ready. Because yes, when it does explode, if you're still in those things, number one, you can get attacked. There's that potential. But number two, you have if you go the opposite way and the IV goes up, all of a sudden you're stuck in those positions longer, because all of a sudden the options all of a sudden get more expensive, right? And so, like, when you see those times happening, if you're an option seller, that's like it's a great time because you're making a lot of money. Don't, like, be too greedy. Take your profits off the table, lock in that P&L gain, and then put that money aside and just wait, because you're going to get another great opportunity around right around the corner. And we're there. Right? It's, between this week and next week is when I think all this is going to start, whichever way it goes. And then that's going to lead into the fourth quarter and everything, and you can take advantage. So for me, I'm doing as much as I can to clear the decks and then just get ready, because it's right there. So take it for what it's worth, but
I think that's
good sign.
I think that's wise. That comes with experience, because what usually happens with most retail traders is when they experience a run of success, and I speak to this from my own experience, way back when, all of a sudden they go, man, I can't lose. And so they start to like, wow, I'm not trading big enough. Let's double down. And this is where they make a huge mistake, because all of a sudden it's almost like the market was waiting for them to do that. Aha. It's like that old, I have you now.
Gotcha. Yeah.
So it's brutal. It's one of the lessons that everybody goes through, because you will, sometime earlier in your trading career, you will feel that sort of impervious nature, like you cannot lose. Like, wow, why is this so tough? And then,
and then all of a sudden, bam, you get waylaid.
Yeah, the old hammer of Thor will come down.
Well, even this spring, we had that time where we went. It seemed like we went on forever. It was like 6, 7, almost 8 weeks in May and all that stuff, where we just walked sideways, and it was great, And even during that time, I was, watching, like, I was taking things down and everything else. But, still had positions that got nailed, that I had to adjust on coming out of that, and I was on top of it. So what I've done over the last few weeks is I've actually, on my existing trades, I'm closing those out, and that's rocking. I've just downed the position size a little bit, over the last few weeks, because the positions that I put in over the last 2 weeks or so, those are the ones probably most vulnerable, right? After another week or so, when this starts, those positions will be fine. So I've just cut back on position sizing a little bit while closing all these out, and should mitigate any of that type of big movement stuff coming out and during this round of it. You get a couple times like this a year, so it's always good to maximize your profits, but get yourself freed up to take advantage, because whichever way this goes, you can follow it and just sell against it and really reap the benefits of it.
Hey guys, by the way, for any of you watching us live, there's a contingent out there that's watching us live here today. The rest of you are going to be watching this on a replay later on. But if you are live, go ahead and fire in a question or two if you want. If you have anything that you can play Stump the Dave or Stump the Doc out here. Anything that's bugging you with today's market, and we'll let you know what we think about it.
Doc, I actually saw a question had come in afterwards on one of the videos about the Darvis box.
Oh,
they had questions about how to like set up and read the Darvis box, and it's from I know this was like from a little while ago, but it'd be a great time to cover that, because I think, wow, that's right now we're in a box, right? So it's a really good time to kind of look at that and talk about how those work. And I think, that'll help answer that question.
Well, the thing behind a Darvis box, because I think I do remember that question. It was like, well, are you just arbitrarily writing a box around things? But I mean, if we do this like a hard right edge kind of thing, what we're looking for is, let's say let's see if I can come up with, let's say we are rallying off the top. Okay, so what we're looking for is we're looking for reversal candles. And so here's a good example of a reversal candle. This is a great big, bullish or bearish engulfing pattern that we had. Okay, so we bounce off of the bottom, and now what people are thinking is, so we went all the way up here, we dropped down like a stone. I mean, this was a pretty hefty retracement. And so what people are going to be wondering is this going to be heading like this, or are we going to be rallying to the upside? And so what you want to do, now we have our lower end of the box here. What you want to do is you want to find some kind of reversal. And so now I've got this set, because now I've got a reversal to the downside. And now I've got another one of these monstrous bearish engulfing patterns to the downside, right? So we have a 100-point box in here, 4350 to 4450. And so, yes, love to hear that sound. So that's the sound of victory, by the way. So if it breaks down through this box, then that is just a downtrend continuation. However, if we break to the upside from here, that is going to be a reversal, because this is going to be a higher low. And so this is what I was talking about a couple weeks ago. Like, okay, so here's a higher low so far. Again, a break above 4460 at this point is going to show a reversal. And so, boom, there we go. That was, I forget if that was a JOLTS or one of those reports recently, but notice what's happening here is that we had a lower highs, lower lows. We break up to another lower high, but we came down to a higher low, and that is a reversal. That's a change in polarity. So the Darvis box in this case, this is what I was looking for. You look for a reversal candle. So that's a reversal down there. This was a reversal here. And that shows to me that if the price is breaking above 44.50, it's most likely going to go higher from there for at least a short period of time. And it did. We did get a nice move out of there that was good for almost 100 points. And so now, when you come down to the bottom again, you're playing this every single time. And so today, our Darvis box is basically this area here. It's gotten to be super small, right? So this is about it right here. So break below this trend line, and a close, especially below that trend line, that is very, very bearish and probably heading lower. It's going to attract a lot more sellers into that area. But a break above 4,500 would encourage buyers and or encourage shorts to cover at that point. So this is how you can use a Darvis box. And there, it looks like there's a question came in here.
Yeah, we got a question about that 2011. How many days after Powell speaks do we expect the initial false move to last, even if based on 2011? Well, here's what I'll say. 2011 didn't have zero DTE. And that's changed the game. Things move much faster, I think, now. And what we've been seeing in these false moves is that literally the next day it's changing around. So you'll get that initial move of Powell, and it won't really happen. Typically, it's happening in the 3 p.m. hour after he's done, or you'll have him, it'll go all over the place at the decision, and then having him speak, it'll go all over the place. And then once you get in the 3 o'clock hour, especially like to the 3:30-ish time, that's when things really start to, take hold, whether it's going up or it's going down. And then usually on Thursdays is when we're going, we've been seeing like the reversal Friday at the latest, from all of that. So if we get a nice, let's call it 60, 70 point move on the S&P higher out of Powell on Wednesday, look for that to start getting faded on Thursday, if it's going to get faded at that point. And then that's it. That's what I would look for. If we go down out of there, I think it would exacerbate the selling, and you would probably see us head on down to, that 4,400, 4,350 we could get to relatively quick. And then that would be probably a place of, support where things would maybe consolidate and then go higher from, and that would kick off the weekly trend. Doc, what do you think?
I pretty much agree with that. I've got a different take on that. So what I'm going to look for, so I think that's a great question, because it's like, how do you know whether or not it's a fake out or it's real? And the answer to that comes when you transition to a larger time frame. So for example, if let's say that we break to the upside, okay? And that would be a daily uptrend, would be something like that. So we'd break to the upside. Now, when does that transition to the weekly chart? The weekly chart would just show that's just another higher low. Now, for the weekly chart, this has to transition above 4,600 for me to believe it. And so if we get just a little pop to the upside, if it doesn't take out 4,600, I think it's going to be very suspect of creating a bull trap into there. And you can take the opposite condition if you want to look for, if we have a break to the downside, that's going to have to break underneath about 4,350 for me to take that seriously as a weekly change in polarity. So it's the transition over to the larger time frames that really separates the two from that. So it's one thing. It's kind of like putting the puzzle pieces together.
Yeah, and remember, weekly happens over weeks. So it's not like you get a daily swing where like you can blow out all the energy in a day or two, right? Weekly swings usually last 4, 6, maybe 8 trading days. But daily can go 4, 6, 8 trading days. But a weekly swing, that can go 10, 12, 14 weeks, right? So like it doesn't have to start with a massive, massive move. It'll just start in a direction and then start to gain steam as it goes. And you can see that a good example is like, October of 2021, right? Where we had that like 5% dip down and the weekly was charged up. And then all the way through November into December, we hit all-time highs and ran parabolic even, with that energy. But, you started getting going and it's like 2-3 weeks in, it's like, oh, okay, this thing can't last. And it just kept going and going. And that's what a weekly swing will do. And so you kind of got to give it the time to start. What I usually say is once it gets below 50 on the energy, that's when I confirm it. Because I've seen it where they'll start to the energy will start to release, and then something will happen. It'll tick back the other way and kind of walk sideways in the energy and not really go anywhere. It hasn't really released yet, and then it will release. So usually when it gets below 50 is when I say, okay, the trend's kicked in, and this is proving itself or confirming itself. So that's another thing that we'll watch in these weekly videos. We'll be able to see really clearly when it's dipped below 50, and it should have a pretty decisive direction at that point.
Okay.
So any other questions out there?
Just looking at the chart here, we are starting to lose it a little bit. We're right back into the, we've flattened out. The S&P is absolutely flat for the day now, which is consistent with what I would expect to see in this market.
That's what we've been seeing is the end of the day, the pros are fading it.
Yeah. Just, Like, so, but until we break below 44.30, until we break below this trend line, this is just more intraday noise. There's going to be more games going on in the next 2 days.
Yep.
Through this, and then even into Wednesday morning, there's going to be games going on. So I guess to kind of wrap things up here, both Dave and I think that after the Fed meeting, there may be an initial false move that comes out of that, whether it's to the upside, whether it's to the downside. That's probably going to be the wrong move. The only way that we'll be able to know for sure if that move is real is if it takes out some of the weekly swing points on there, and that might take a little bit longer because we're going to need to see a weekly close to really truly believe that. So into Friday. So don't overreact to any meeting or any movements that you see this week, and there will be a lot of them because we got a ton of energy on tap at disposal for this market to go. So
yeah, definitely look for it. The way I kind of see it is, I said in the beginning, I think maybe a little relief rally off of Powell, and then the ensuing days into next week is when, if we're going to reverse and give it all back and go the other way, is what we'll see. So, in fact, if we go down off of it and it continues, that's actually the best thing right now, because that'll freak everybody out. It'll be, oh my gosh, Armageddon, the end is near, the whole thing's going to crash again. And then that'll take us down, maybe undercutting that last low there and find that almost like what you showed earlier in 2011, right? That kind of double bottom with an undercut, and then whoosh, you get that just ripping rally into the fourth quarter. And that has happened so many times, at this point in time of the year, that you can't discount that. And it just needs the catalyst, and the Fed can be a good catalyst to kick all that stuff off, along with the budget debate and the shutdown of a government. Right?
This is not going to be very pleasant to go through, but ultimately this may be the best thing that we'd see into the fourth quarter. Now, I have no idea what on earth is going to happen in 2024. We have so many negative catalysts. We probably have some positive catalysts that we're not even aware of right now. So I'm not going to put anything on the table again. All we care about is the next swing for right now. Don't dilute yourself by getting too drawn into the political debate or anything like that, because it will create a cognitive bias in you. You'll be unable to see what's actually happening right in front of you. So that,
unless
that's
you're setting your
danger.
trades up for a year to 15 months out, then it really doesn't matter, right? If you're like us and we trade a month through, a week to a month to a couple months out, we're just you're concerned with where this swing goes and stuff, right? So I think that's the key. But we'll see. We'd like to talk the macros. You guys know I like to talk the macro stuff, and it's not great. So I definitely think 2024 is going to be a tougher year. We may see one of those crazy sideways years where we just go nowhere for an entire year. It's an election year, and we might have a recession in an election year, and those will just kind of like keep each other like this. And the market will wait until there's the election result and then move into the end of the year, So we've had those years before, and those are awesome years to trade, but they're scary because people are like, it's got to move, and I don't know which way it's going to go. So I don't know if I want to enter a trade. Well, if you have a system and you stay on it, you can be one of your most profitable years ever. So
yeah, that's why I like the campaign diagonal that we're setting up lately. Is I just honestly don't care what happens to it. It's probably the freest.
You're protected every way.
The freest I've been with just volatility to this point. All right. Thanks, everybody, for your patience and your attention and your questions and everything else. And we look forward to talking with you next week or any other time. So
thanks, guys.
From Dave Lukas, I'm Doc Severson. We are out. We'll see you guys next weekend or next week. All right. Take care.
Bye.